you have got a good cash flow position this quarter, and the outlook is good.
At the operating level, so that's before capital, we're up over $1.7 billion a year. The cash engine is starting to really demonstrate what can be done.
How many ounces can we expect to come out of AngloGold Ashanti?
Well, certainly for next year's forecast, we're looking at somewhere between 4.55 and 4.75 million ounces. And within 5 years, or less than 5 years, we're looking to be at around 5.5 million ounces. So that's almost 20% growth over 4 years. And so from us, continuing strength in the gold price, improving operations, continuing to do a good job in cost management, open those margins up. We're looking to generate more free cash flow and the ability to invest in our businesses. We can fund that growth organically from within the business, so we think we're well positioned over the next 3 to 5 years in terms of driving organic growth. We have the balance sheet capacity and the cash flow generation of the business to be able to fund those programs.
And then looking more long term, your activities in the DRC are starting to gel.
Well, we have a partner in the Kibali project, or we have two partners in Randgold and Akumo representing the DRC government, and we believe they've done a great job, the Randgold management team, in fast-tracking infrastructure development, a 180-kilometre road, removing and supporting and developing new opportunities for people that live in the DRC region. So they've done some very, very good work on the ground. They're targeting a 2013 production rate. It is an aggressive target. We do see some risks to that target, and we're forecasting in our numbers 2014. But quite frankly, if the team can make 2013, Mark Bristow will get a very good bottle of red wine from me, that's for sure.
Obuasi, you displayed a little bit of optimism and not looking at it on a quarter basis, but more long term, and you feel that those 30 million ounce resource could possibly be turned to positive account in time.
If you look across our operating portfolio, we have 20 operations. 19 of the operations have seen material improvements in terms of the way we're delivering. So very happy with that, but we are disappointed. Whilst we've made some improvements in Obuasi, we've reduced our cost by 70 million, we aren't delivering on our potential. And what we've said, I think in some areas we've expected too much too quick. What we've done is we've gone back with the team and said, look, we want a long-term improvement strategy and profile, so let's get the infrastructure right, let's continue to clean up the operations. We've spent $750 million over 7 years cleaning up, rebuilding infrastructure. Let's keep on task and make sure over the next 12 months we really set the platform for improved performance. So I think you've got to do that in one of those challenging environments, but the prize is 30 million ounces and a long-term operating asset. So we'll continue to apply ourselves. What we've learned from our other sites will also be applied at Obuasi, so I think we're putting the right resources in the right places at the moment.
And that sort of patience you showed in Geita has paid off.
We had positive free cash flow from Geita last year of 70 million, off 2 years before negative 120. So some significant improvements and lots of lessons learned as we go to Obuasi.
And some big things happening in Australia with Tropicana.
Well, in the last 10 years, we've made 5 major discoveries, better than any of our peers. We've added 22 million ounces, $25 an ounce. Brownfields exploration, we've added north of 30 million ounces at $13 an ounce. People are going out buying new assets or exploration plays for something like $300 to $500 an ounce, and in some cases $1,000 an ounce. And we're doing it for an absolute fraction of that cost with our exploration team. And that really does define, I think, a significant competitive advantage we have in the group.
Just swinging back to South Africa, we always think of AngloGold Ashanti as gold. There's also the uranium element and, of course, silver and copper elsewhere, but particularly uranium. How strategic is that for you, and how does it contribute to the group?
Well, I think it's a very important play for us in South Africa. We are South Africa's largest uranium producer. South Africa itself is talking about potential to go to uranium plants in the future for energy, so we would like to be a player in that game. We have 350 odd million pounds of resource. How do we bring that to account and really create value for our shareholders in South Africa is something that's exercising our minds at the moment. We're very excited regarding the potential we see. So we expect that to continue. Silver will remain a solid producer of silver out of Argentina, and in our exploration work we're seeing some base metals, some copper, So there are opportunities starting to open up to us, but we still remain a predominantly gold play, 93% of our revenues. So we're still very much a gold company in character.
But in the long term, these could spin you into a broader diversified operation.
Well, absolutely. At the moment, we're focused on improving the value of our existing assets and extracting more of those elements that add value. We're not out there chasing new opportunities in other commodities, but if you've got them and you're kicking your toe on them within your existing operations, then of course you've got to drive the value. So we're very excited by those potential opportunities as well.
Thanks very much, Mark.
For 30 years, Creamer Media's Engineering News has delivered unmatched insight into South Africa's real economy. Subscribe now and go to engineeringnews.co.za for the real economy in real time. Engineering News, not just for engineers.